Welcome back to The Explainer. Today, we're diving into something way more fascinating than just your standard quarterly earnings report. We're actually going to examine the anatomy of a successful corporate pivot by breaking down Zepp Health's Q1 2026 results. If you follow the wearable tech space at all, you already know it is incredibly competitive. But Zepp Health isn't just surviving out there, they are actively reshaping their entire identity. So we're going to look at the data, the new hardware, and the underlying strategy that's transforming them from a high-volume brand into a true premium powerhouse. I want to kick things off by hitting you right away with this number, 33.8%. That is Zepp Health's year-over-year revenue growth for the first quarter of 2026. Now, if you track retail cycles, you know perfectly well that the first quarter, right after the holiday rush, is traditionally a very sleepy season for consumer electronics. So to post a nearly 34% jump in that specific window, that's a massive signal that something fundamental has shifted in their demand curve.
To understand exactly why that growth is happening, we don't have to look much further than CEO Wayne Huang. He attributes this jump directly to a multi-year transformation. Basically, they're moving away from just trying to sell the highest volume of basic step trackers. Instead, they're evolving into a premium-focused global brand anchored by this concept called hybrid training. And honestly, this is the core thesis of our explainer today. Zepp is successfully pivoting away from sheer volume straight toward premium value.
Okay, let's dive right into Section 1, the premium transformation, and how they're moving up the value ladder.
So what does this pivot actually look like in the wild? Well, Zepp is seeing broad-based growth across both their entry tiers and their premium lines. But get this, in March and April, the high-end T-Rex Pro and T-Rex Ultra models represented nearly 50% of total sales within the entire T-Rex family. That is huge. Users aren't just buying Amazfit watches, they're actively choosing to spend more and move up the value ladder within the ecosystem. And they're sticking around because of sticky software features like Zepp OS, Zepp Coach, and Hybrid Charge. The takeaway here is absolutely crucial. Deepening software engagement is directly fueling these high-end hardware upgrades.
Moving on to Section 2, the Q1 Financial Scorecard. Let's prove the pivot. Revenue landed at a very solid $51.5 million. And this isn't just a randomly impressive number, it actually hit their guidance range perfectly. It represents a highly predictable, stable start to the year, and it shows that management has a really firm grasp on their sales trajectory, even during a traditionally slow quarter.
And the contrast in these metrics brilliantly illustrates the real power of a premium strategy. While revenue jumped that 33.8% we talked about, gross profit actually outpaced it, increasing by 35.3% to $19.4 million. Think about that for a second. When your gross profit scales faster than your overall revenue, it absolutely proves that your brand is scaling profitably and that your premium pricing power is holding incredibly strong.
Which brings us to their gross margin, expanding to 37.7% for the quarter, up from 37.3% a year ago. Now sure, it did moderate just slightly from the massive record margins they saw in Q4, but expanding their margin year over year during a Q1 cycle, that is a remarkable achievement for their operating model, and it really underscores the brand resilience we were just talking about.
All right, Section 3, navigating market headwinds, pressures versus progress. Behind the scenes of those margins, there's a serious tug-of-war happening. On one side, you have these fantastic positive drivers, like increased scale and a vastly improved premium product mix. But pulling in the opposite direction are some very real macroeconomic headwinds. First off, Q1 is typically when they refresh their entry-level lines, which just naturally carry lower margins. Add to that the elevated memory component costs hitting the broader tech sector right now, and the impact of the Chinese renminbi appreciating against the US dollar. The fact that they still pulled off a 37.7% gross margin while fighting off all those headwinds, that's a real testament to the fundamental strength of their premium strategy.
Now, adjusted operating expenses did see a year-over-year increase. Research and development went up to support their upcoming AI features and product launches, and sales and marketing spiked because they front-loaded investments in massive branding events like CES and their new athletic partnerships. But here's the kicker. Because their revenue scaled so efficiently, their adjusted operating loss actually narrowed year-over-year to $16.3 million. Essentially, they are spending money to make money, and the ratio is steadily improving in their favor.
For those of us focused on financial stability, there's some great reassurance here. Zepp ended the quarter sitting on a highly solid $103.2 million in cash and cash equivalents. Even more impressively, despite making some strategic risk purchases of key components to safeguard their future supply chain, they managed a highly disciplined drop in overall inventory, bringing it down to $62.8 million.
They are running a remarkably tight, efficient ship.
Let's move to Section 4, Ecosystem and New Products, the hybrid training focus.
Before we look at the watches, we need to clearly define the exact niche Zepp is trying to dominate: hybrid training. This isn't just about closing your rings or casual jogging. It's a dedicated, intense fitness approach that carefully balances endurance, strength conditioning, crucial recovery periods, and managing daily life stress. To actually serve this market, a wearable has to move way beyond casual tracking. It literally must deliver serious, comprehensive, and highly accurate performance data. And Zepp has engineered a very specific ladder of products to meet these users at exactly their level of intensity. At the foundation, you have the new Amazfit Bit Max, which is a fantastic entry-level all-around daily driver. Moving up, you've got the Balance 3 and Balance Ultra, which leverage Zepp's hybrid charge technology to give users one clear, unified view of their personal capacity across stress and recovery. Then, for the serious endurance athletes, the Cheetah 2 Pro is engineered specifically for marathoners. And at the absolute peak, the Cheetah 2 Ultra, built to withstand the prolonged exposure and unpredictable terrain of elite trail runners, or, just the truly masochistic out there. It's a perfectly tiered ecosystem.
To really cement their credibility in this space, Zepp just secured a landmark exclusive 3-year global partnership with Hyrox, the massive indoor fitness racing competition. And guys, this isn't just a basic logo slap. This deal gives Zepp exclusive integrations, specific training modes, and direct access to a highly engaged global network of gyms and dedicated coaching communities. It places Amazfit directly on the wrists of the most influential athletes in the hybrid training space today.
Finally, Section 5, the Q2 outlook and the road ahead. Looking forward, management is forecasting Q2 2026 revenue to land somewhere between $63 million and $68 million. If they hit this target, it represents a continued, healthy year-over-year increase of between 6% and 14%. The big takeaway? The momentum from Q1 isn't a fluke. They are fully expecting this growth to carry forward through the first half of the year based on strong, consistent demand across their entire portfolio.
But hitting that top-line revenue number isn't their only goal. Their strategic focus for Q2 is deeply rooted in the quality of that growth. They're focused on sustaining this premiumization wave, continually improving the product mix so people keep buying those higher-tier watches, maintaining strict pricing power to defend those hard-earned margins, and keeping their eyes fixed on long-term profitability over short-term volume grabs. They are absolutely playing the long game here. Which leads us to a pretty fascinating final thought for this explainer. Zepp Health has clearly proven they can successfully execute a premium pivot. But as they continue to blur the line between a casual daily smartwatch and an elite, specialized hybrid training tool, the big question remains, will their success force a reshape of the entire fitness tech landscape? I mean, if consumers realize they can get elite-level training data without sacrificing their daily smart features, other legacy brands might really have to scramble to keep up. Thank you so much for joining me to break down this remarkable corporate transformation, and I can't wait to explore our next topic with you here on The Explainer.